Hi, David Bassanese here, Chief Economist at BetaShares, and this is a snapshot of my market trends report for the month of October. Now, in September, we did see a pullback in equity markets after several months of pretty solid gains, or consistent gains really for most of this year. The MSCI All Country Index, return index dropping 3.5%. And on the back of a rebound in bond yields. So we've, again, for most of this year, we've had bond yields coming back down again after having rebounded late last year and in the first few months of the year. But that decline in bond yields ended in September, and they had a pretty chunky rebound. So US 10-year bond yields up 21 basis points to 1.49%. And on the back of a hawkish Fed meeting in September, where they did signal a reduction in bond purchases will likely commence in November, and a few more members signalling in the so-called dot plots that they think the first rate rise may well come as early as late next year. So that's something the markets are starting to digest. And really the big picture here is that central banks are moving closer to taking away some of that COVID-related stimulus. Bond yields are bottoming and starting to move higher, and that's going to put downward pressure on equity valuations, or in the US in particular. The PE valuation around about 20 times earnings is above its average of even the past 5 or so years, and as rates go up, that's probably going to come down. Now, the good news is that should be more or less offset by the ongoing growth in earnings. So we're going to get this tug of war increasingly over the next few months and into next year, where bond yields putting downward pressure on valuations, but earnings continuing to support the market. Other issues swirling around at the moment, of course, we had some debt problems in China. Evergrande, one of China's leading property development companies, having problems paying off some of its debt or meeting its debt obligations. And also in Washington, concerns, the need to raise the debt ceiling and the argy-bargy between the Democrats and the Republicans in raising the debt ceiling so that the government can continue to function and issue bonds to meet government services. Now, this comes around every few years, these squabbles, and they do end up sort of resolving themselves. I think both Evergrande and the Chinese problems and the debt ceiling problems are issues that should be contained and being resolved. But the broader issue of global recovery and central banks moving closer toward lifting rates is going to be the ongoing issue that markets will need to negotiate heading into next year. What we're seeing also at the moment with that rebound in bond yields, in terms of thematics within the equity market, a rebound in interest in value areas of the market, things like energy and financials, and at the same time, the bond yields have gone up, energy prices have gone up, oil prices have gone up as well. So it's supporting the value parts of the market at the expense of the growth technology parts of the market. So that rotation seems to be underway as well. That's pretty much it for now. Full details of my report are available in the Insights section of our website. So please go there if you'd like to learn more about what I had to say for the month. Thanks for watching, and I'll see you again next month.